You're watching Wall Street Confidential. We are revisiting the oil industry now. Jim Cramer, you have added to BP and ConocoPhillips in your Action Alerts portfolio. Are you still bullish on this sector?
Yes. There's two reasons why. One is the dividends here, which I'm not worried about. But the other is, I have never gotten in trouble, other than once in my career, buying a 4 times earnings stock. I mean, 4 times earnings. I mean, this is a remarkably low multiple. You're talking about literally a fraction of the multiple of the market. I mean, a quarter if you use, 1/4 if you use it, the normative model for 2009. And I'll make this point, which is that if oil goes back and it's showing great resilience, you'll be saying, how did I pay 4 times earnings for a company with actual growth? Conoco bought natural gas at, I think, good price now. They bought Burlington Resources, and stocks come down, Conoco, in part because natural gas has been so bad. They have natural gas, they have refining, and they have oil. But I would tell people that it is very clear from all the commentary I read on the drillers that we have not invested anything during this downturn. So when commodities come back, oil will come back viciously, and we'll be looking at Conoco and saying, how did this get here? How did it get so cheap? Chevron is cheap, BP's cheap. How does that have a 7.5 yield? I look at these stocks and I say, there's very few stocks I feel this way. There's a lot of people who say, oh, we'll look back and this will be an era where we'll just be so glad we bought. There's a lot of companies that don't feel that way. I mean, that was the analysis for all the banks. That didn't work. That was the analysis for all the drugs. That hasn't worked. The Wyeth bid is not worth, if you held on to Wyeth, you're going to be endgame not good, and Pfizer bad. This group is a fraction of the multiple with genuine growth over the next 18 months. And Conoco is the exemplar of the group. Chevron at 67 is another one I got to buy.
Now, there are a lot of parts and parcels to, when you talk about oil. There's the drillers, there's the explorers, there are the refiners. Right. I mean, is there one part of the industry that is dragging its feet right now?
Well, I mean, I think that I've been leaning against the natural gas stocks. I had Aubrey McLennan on last night as the CEO of Chesapeake. I need yield here to justify owning anything. I mean, one of the things that we've been saying over and over in my columns in Real Money and Mad Money is you either are recession resistant or you have good yield. And the natural gas don't, the drillers don't. Schlumberger told you to take numbers down, the stock went up. So then everyone got comfort that it's the last bad quarter. But Schlumberger made it clear it's not the last bad quarter. So I mean, I think that but those are the negatives. The positive is refining margins are really good here. And Marathon and Conoco have really good refining operations.
Okay, thanks so much, Jim. Always great answers with you.
Thank you.
You're watching Wall Street Confidential. Stay tuned.